All right, so welcome everybody to Rethink. Oh, how did I do this here? To Rethink Renting. I'm Cam from the Santa Sales Houses team, and I've got my man Dale here, also from the
Hey,
Santa Sales
everybody.
Houses team. Like Dale said, there is a chat function, so if you have a question, feel free to type it in there. There's also a Q&A. You can put it in there as well. We will answer all questions at the end of the presentation. Let's get into it. So, Rethink Renting, what's it all about? Right now, you're tuned in likely because you're currently renting a home somewhere in London or Ontario, wherever you're tuning in from, and your goal is to go from renting to owning, all right? That's what this presentation is all about. So we're gonna get into the details of why people rent, benefits of owning your own home, the 5 most crucial steps to buying. These are proven steps, a nice process that we take all of our clients through to help them with a successful purchase. We're also going to talk about our assisted buyer program, which will be of interest to some of you. And then, like I said, Q&A at the end. Let's get moving. So renting versus buying, real quick points. Renting, you've got very low upfront costs, a lot of flexibility with your housing choices. If you move around a lot every year, you've got a lot more flexibility with what you're doing there. And it also comes along with a lot less responsibility. You don't have ownership over the house. You don't have to maintain the house. You don't pay property taxes. You don't have to fix or repair anything as it goes along. And those lower monthly costs, which we'll talk about, could allow for some other investments if you choose to do so. With buying, you've got a down payment needed, right? In Ontario, minimum 5%. But along with that, you get to enjoy the benefits of owning your home, pride of ownership, long-term investment that you can update, repair, renovate, make it look the way that you want, okay? And through some of those renovations, maybe you build equity. Also, during the time that you own your house, the market will probably go up, which adds money to your pocket. That's equity, right? So those are some of the benefits of renting versus buying, okay? Now, Dale, the cost of renting versus buying, let us know.
So typically with renting, you have to give your first and last month's deposit as a down payment, where versus buying, you need at least 5% down payment. As Cam mentioned, obviously the higher down payment that you have, the less you'll pay in mortgage insurance. However, a lot of first-time buyers, it's not uncommon to do 5% down. So you're looking anywhere from about $6,000 to $3,000 a month, depending what it is that you're renting. Versus purchasing, you'll have your monthly payments, plus you're going to have any maintenance on the house, utility costs, that sort of thing, right? So with renters, you just have your insurance and sometimes utilities, or sometimes that's included in the price, and your landlord will normally take care of any maintenance that has to be done around the unit.
Mm-hmm. Perfect. All right, moving along. So what we wanted to do is to illustrate the main benefit of owning your home, building equity. We put together a little case study that pertains to the costs upfront and ongoing of renting versus buying. So these 2 properties were available in London earlier this year. One of them is a house on the left was for lease, and the house on the right was for sale. Same neighborhood, very similar houses. They even look the same. Let's take a closer look at what the cost, like I said, upfront and ongoing are of living at either of these houses. So the first section there deals with your monthly or ongoing costs, okay? The main takeaway here, it's more expensive on a monthly basis to own a home. Specifically these 2, it's more expensive to own the home, all right? You've got extra costs such as maintenance, property taxes, and your mortgage that you wouldn't have if you're renting the home. And this case study was over a 5-year term. So if you own the home for 5 years, you're making monthly mortgage payments during that time. Over that 5 years, you're going to spend a little over $35,000 more to own that home than you would if you're renting it. Okay, so more expensive on a monthly basis. Next, we look at our upfront costs. Your only upfront costs when you're leasing a house, you got your 2 months upfront, first and last. If you're buying the house, you got your down payment, minimum 5%, land transfer tax, and your potential closing costs, your lawyer, title insurance, any adjustments that are made on closing. And those are the differences with your upfront costs. Once again, much more expensive upfront to purchase that house outright. The interesting thing is at the end when we consider what your equity position is at the end of those 5 years. Okay, so you've been renting the house for 5 years, you've been paying monthly to your landlord, and at the end of it, you don't have any equity to show. So that money goes towards paying that landlord's mortgage, property taxes, their cost to carry the property, and you've lived there for cheaper, but you don't have anything at the end. After 5 years of owning that home, you have your down payment that you put on the house, that's 5% right there. You'd be making your mortgage payments every month, which include principal, so you're paying back your original loan, and over 5 years, you've paid back almost $75,000. So now you own $75,000 of the house. And over 5 years, if we were to take a very conservative look at market appreciation and say, you know, the market should appreciate 4% per year, and you bought that house for just under $600,000, expensive house for sure, but over those 5 years, if it increased by 4% every year, you're looking at almost $130,000 in increased value for that house without doing anything. So you've almost put $230,000 of equity into your pocket in 5 years. So there is the main difference and the main reason I would say most people choose to buy versus rent. Now, how do we go from renting to owning? Like I said, these are the 5 most crucial steps. We take our clients through this. Dale, why don't you tell the folks?
Before I do this slide, I'm just going to add a few things on that previous slide. So as Cam mentioned, 4%. So London, typically in a normal market, we increase about 2 to 5% a year. Over the last 4 years, we've been averaging 15% increase per year. So 4% is extremely conservative in this market. So you could potentially see much more equity these days based on the markets we've been experiencing the last few years here. So, so to go from renting to owning, so you need to get educated. So what you're doing right now, watching this webinar, you know, reading stuff on the internet, make sure you're using trusted resources to do that. Obviously, talk to your friends, your parents, other people that own homes, neighbors, to see what experiences they've had and who they've connected and how the process went. You need to build up your down payment. So again, minimum 5% down, get pre-approved by a mortgage specialist so they can run all your numbers, check your credit. And then once all that's good to go, then you meet with a real estate agent like myself or Cam, and we help guide you along the way, figure out all your criteria and set up a listing alert for you. And then we go out viewing properties that are of interest to you, and we get aggressive in this market because there's a lot of competition right now as a buyer.
Yep.
So a lot of multiple offers, and we hold your hand, coach you through that on how to be successful.
Yeah. So like I said, these steps are super crucial. We actually did this webinar earlier this year, probably about a month and a half ago, and we had somebody watch the webinar and the next day reach out and say, hey, you know, I really liked what you guys had to say. I used to own a house. I've been renting, but I'm really interested in getting back into owning a home. I didn't think it would be possible, but after the webinar, I think I can do it. So can we meet and talk about what we're trying to do? So we met with her, took her through all of these 5 steps. She already had a down payment built up because she had amazing savings, which definitely expedited the process. But we got her connected with a trusted resource and got her pre-approved for a mortgage. And she just bought a house this past week. So this process, yeah, absolutely. Congratulations to her. We know what we're talking about. So when we say that these 5 steps are super important, we mean it. All right. So let's talk about one of these important steps here, qualifying for a mortgage. The holy grail of qualifying for a mortgage in Canada is with an A lender. And an A lender is what you probably think of when you think, hey, I need money to buy a house. And that's a bank, you know, TD, CIBC, RBC, BMO, or you go to a mortgage broker. And a mortgage broker, Dominion Lending is a big name. There are a few smaller boutique brokerages here in the city, Modern Mortgage Co. that we work with a lot. And they have access to many more A lenders outside of banks. And they like to shop around and get you the best terms available. Now, in order to qualify for an A mortgage, you need to have 3 things. You need income to support that purchase, all right? So amount, your yearly income. and it needs to be steady, okay? Good credit. It used to be 680, your minimum credit score to qualify for an A lender. They were talking about raising that. I know that CMHC was talking about doing that. I don't know if they did, but that's your credit score that you need to get an A lender. And of course, your down payments, okay? Minimum 5%, but anywhere from 5 all the way up. I've never seen anyone pay 100% of their purchase with cash, but it could happen. Right now, you might be thinking, okay, that's great. I really like, I bank at TD. It'd be great to get a mortgage from TD, keep everything in one house. I don't know about my credit situation, or I don't have a huge down payment saved up. What are my options now? There are more options, okay? And what we'd be looking at is a B lender or private equity funds through a traditional purchase. A B lender is not federally regulated, so a lot of credit unions and other institutions that lend money to people that are looking to purchase homes, and their interest rates are going to be a little bit higher, and their terms are not going to be as favorable. All right, so A lender, amazing. B lender, good, can get you into the house, still not the best. If one of those things is not going to work, we look at option 3, private equity funds, and it's exactly what you think it is. That is somebody who has a lot of money, they set their terms, and if you really want to buy that house, that might be your only option. So we're talking double-digit interest rates, which is astronomical considering where we're at right now. Most people probably aren't considering private equity funds to purchase a house in the city of London right now because there are still more options, okay? So like I said, that is a traditional route. You get a mortgage financing from a AB lender, and that's traditional what we would look at. Now, if you're renting right now and you're thinking, I don't have a huge down payment, but I really want to get into owning my home. I want to have a stake in this house. What could possibly be out there for me? And we do have more options. I already alluded to it earlier, and it's our assisted buyer program. We're here to offer this program to people who are currently renting, want to get out of renting into home ownership as a fourth option that we're talking about. So with our assisted buyer program, Dale, why don't you introduce the folks to that?
Yeah, absolutely. So as Cam mentioned, this is a fantastic program, Clover Properties. They've been in business over 10 years. They are a Canadian-owned company. The people live in Vaughan, just north of Toronto. They are Canada-wide, though, so a very big company. However, they're very mom-and-pop business type thing, right? So in over 10 years, they've helped over 365 families go from renting into home ownership. Mm-hmm. People that maybe had bruised credit, maybe they were immigrants, maybe they didn't have, they went through a separation or something and just they didn't qualify for those traditional mortgage products. So yeah. They're very efficient. They coach you the whole step of the way as well, right? So they're extremely transparent. They lay all the numbers out for you from the beginning and make sure everything makes sense for you. And it's usually a 2, 3, or 4 year time frame, which we'll get into in a little bit. And they want to help people. They're in it to help people, and it's a feel-good program, I guess you would say. And absolutely. Cam and I have dealt with a few other companies in the past that were definitely you kind of got that sketchy feeling from them. This one, we love them. They're absolutely fantastic, and just they want to help people achieve home ownership and their dreams.
Absolutely. So Clover Properties buyer profile. Who fits into this program, and who's it really geared towards? All right. So in order to qualify for this program, you do still need strong income to support that purchase. You don't necessarily need to have as long of a track record for your income. And you do still need a down payment, but typically it's smaller than you would traditionally need to purchase a home on your own right off the bat. Of course, it depends 100% on each person's individual situation. So, if you think right now, hey, I've got some savings, is this going to get me into the program? We're absolutely going to talk all about that, okay? And, we're going to speak one-on-one and see what we can do for you as far as this program goes. Now, where this situation applies really well, like Dale said, maybe you have bruised credit, okay? You went through a separation, or you made some mistakes when you were younger with a credit card, and it's, coming back to bite you in the butt. Bad credit is not going to exclude you from the assisted buyer program. If you're self-employed, like we are, we're self-employed, you don't report all of your income to the government. You've got some business write-offs, and that lowers the amount that the government thinks that you make every year. Assisted buyer program is going to qualify you based on that total amount of money that you make. If you're new to the country, you don't have a credit history, you don't have that track record of income, but you have a really strong down payment from somewhere, right? These are situations where this could work. Or if you just got a new job, you only been working there for 6 months, but you're making a ton of money, and you're thinking, I should be able to afford my own home. You're right. This is who this program is for. Advantages of the assisted buyer program, right off the bat. Go for it, Dale.
So the two slides I'm going to focus on the most here are the middle two, being the top middle and the bottom middle. So the advantages here, they have a pre-established conservative purchase price. So as Cam showed you about 6 or so slides ago with the example of the home and using a 4% appreciation, which is what this program uses. Mm-hmm. As I mentioned, in the last 4 years, we're averaging about 15% increase per year. So basically after 2, 3, 4 years, if they're projecting you're buying it at a 4% increase and you've been increasing at 15% over 4 years, you've already got built-in equity after that time frame, right? So you're doing very well at that point. Also, the bottom middle one there, credit repair or establishing credit. So some people maybe you've made some bad decisions in the past, or you've got some credit card issues, went through a separation, had some bruised credit, that sort of thing. Or maybe you have no credit. Maybe you've never had a credit card. You've never really had bills in your name. They'll hold your hand. They'll teach you how to use your cards correctly to build up your credit rating, so that after those 2, 3, 4 years, you can qualify for an rated lender mortgage, so that you're getting the best type of mortgage product possible when the time comes to purchase that home.
Absolutely. Right on. So yeah, there are a ton of advantages of that assisted buyer program, but basically at the end of the program, you're buying that house for likely under market value, and that's huge. So application and approval process. We're going to help everyone tonight get started with the application and approval process. We're going to ask you some questions through a poll towards the end of the webinar, just to start building that profile if you are interested in continuing or seeing what the possibility of the assisted buyer program looks like for you. So you pre-qualify through an agent, Dale or myself. Once we've gathered enough information to kind of get you started, we'd introduce you to our partners at Clover Properties, and they're then going to follow up with you and final approval. They might ask for some documents to support what you've told them as far as your income and your down payment, right? Now, in the scenario where you're not quite ready to start the assisted buyer program right now, they're not just going to kick you to the curb, okay? They're going to put you on a path towards success. They're going to help you get to a point where you are 100% ready to go with the assisted buyer program. Once they give us the thumbs up, the stamp of approval, they're going to give us your budget. We're going to work together to help you pick the home that you're going to be living in. All right. That's our job, is to work with you to find you the right home, given that budget. Okay. So home buying process, and this is going to look very similar, whether or not you're going for a traditional purchase through a mortgage lender, AB lender, or if you've decided I'm going to go through the assisted buyer program. This process, pretty much identical. You work with a local real estate professional to create a custom home search based on your wants and your needs. Tell us how many beds, how many baths you need, what area of the city you want to live in, or what area of the province you want to live in, what type of house you like, do you like brick, vinyl siding, whatever. Tell us everything you can think of. We are going to hunt for houses that fit your criteria. All right. Once we start showing you things that you're interested in, get out, view those things in person, start to educate you about the house, the condition, the price that it's going to cost to get that home under contract, and proceed to an offer process, which, as Dale mentioned, you got to be aggressive in this market. We're in a seller's market, and oftentimes we're seeing people having to compete in order to purchase a property. So being aggressive is the key to success here. So how do you buy the home? At the end of the term, how do you go about buying the home, Dale?
So there's, well, like the slide says here, so there are conditions for purchase. They're preset at the beginning of the program. So Clover will, again, hold your hand and kind of walk you through everything and lay out everything from the beginning. So there's no surprises at any point. So they'll show you that final purchase price from the beginning, right? So we find the home that you love. You know what that final purchase price is going to be on the 2, 3, 4 year mark, whatever scenario works best for you, right? So during the tenancy, you're paying rent to Clover, right? So in that rent is a buffer that helps save up additional down payment for the end of that term as well, so that you're also building equity during that time frame as well. So that's the bullet point there, that you're saving down payment during the tenancy period. You're also working with a financial consultant during this time to improve your credit. So as I mentioned a few slides ago, if you have bruised credit or possibly no credit, they will teach you how to build up your credit to get it at that 680 or above beacon score that Cam mentioned earlier as well, so that you do qualify for the best rates of financing when the time comes. And then at that point, you'll receive your mortgage approval and you purchase the home using your initial down payment, which is the minimum 5% that we mentioned, and a combination of that and the savings that you've been buffering towards during paying rent over that 2, 3, 4 years.
Perfect. So yeah, that's that process explained in a nutshell. So our recap, that is the end of our presentation. We're going to just quickly recap, and then we're going to get into, starting everyone's assisted buyer program profile. The 5 steps to going from renting to owning, super important. Number 1, get educated. Number 2, build up your down payment. 3, get pre-approved, huge. Number 4, meet with an agent that you trust and like, AKA us. We're going to do everything that we can to help educate you further. And then number 5, start looking at houses and getting aggressive. The 3 things that you need to qualify for a mortgage for a traditional purchase: income, down payment, and credit. All right, keep those things in mind. We talked about the difference between A, B, and private lenders and how those things kind of stack up in tiers. And if at the end of the day you decide, I want to get into home ownership, the traditional route right now is not for me, for whatever reason, there is the Clover Properties Assisted Buyer Program. And I don't know if we've mentioned this yet, but the Santa Cells Houses team is the exclusive provider of the Assisted Buyer Program in the London and St. Thomas area. Nobody else can do this program in our area. We're the only ones. So please reach out to us if you have questions about that. We want to do everything we can to make this process super easy for you. So what I'm going to do right now is start to build everyone's assisted buyer profile. I'm going to throw up a poll, and it's going to be our first question that we would ask to start qualifying somebody for the assisted buyer program. And that is, what is your yearly household income? So go ahead, check that out. Feel free to answer. Like I said, all of these are private. We're not going to share this information with anybody. It goes directly to us, and it helps us to help you with your assisted buyer program purchase. So leave that up there for another 10 seconds. Perfect. Now, our next question that we automatically ask when we're starting to qualify somebody for the assisted buyer program: how much down payment do you have right now, today, in the bank? It's not 3 months from now, what are you going to have? It's today. What are we looking at? Let's leave that up for 10 seconds.
Just a reminder too, as Cam mentioned earlier too, this program, I mean, some people that are watching this are doing initial investigation and seeing what options they have, right? This program might not work for everybody right now. It might be, you might be 1, 2, 3 months out. You might be 2 years out, right? We're just trying to provide information. If you guys have any questions, we're always happy to answer them for you.
Absolutely. And so that is the beginning of the assisted buyer program. At the end of this, what we're going to do is we're going to email everybody an invitation for a follow-up consultation. So we will have some more questions that we need to ask everybody, but what we're going to do is send you an email. You tell us when it's convenient for you to continue the conversation so that we can get you started on a path toward success, whether or not it's through a traditional mortgage or through the assisted buyer program. All right. Here we go. So like I said, please contact us. If you don't hear from, you're going to hear from us tonight. But in the meantime, if you've got any questions, feel free to reach out to us directly. Yeah, I hope that we answered. I hope everyone found a little bit of value in this tonight. If there are any questions, please fire them up into the chat so that we can address them while we're on live here.
Yeah,
Dale, anything you wanted to add?
No, I think you pretty much covered everything. I guess just recapping timelines again, you touched on it there. So some people, they might be ready right now. Some of you may actually qualify for a traditional mortgage right now, right? And maybe you're just not aware of it, or you haven't talked to a mortgage agent yet. We'd be happy to connect you with somebody to see if that is an option for you. So for some people, it's going to be a quicker process than others, but we're here to guide you through the whole process.
Yeah, seriously. Even if it takes up to 2 years, there are some home buyers that we work with. They come to us and say, here's our situation. This is what we're looking at right now. This is our goal. They might be 2 years out, but we're here to be there the entire time, answering questions and assisting along the way. So we got a question. Is there a maximum value of home that you could purchase through the assisted buyer program? No, there's no maximum. It's 100% dependent on what your yearly income is and what your down payment available is. You make $1 million a year and your credit score is 0, you can probably afford a fairly solid home, right? Through the assisted buyer program. If your credit score is 0 and you're making $1 million a year, I don't know how that happens, but yeah, bank's not going to be lending you anything. So no, there's no maximum through the assisted buyer program. You know, in London, our average price point, you know, right around 450, 460. But Clover Properties does deals all over the GTA as well, where their average price point is almost 950. So they can help any buyer in any situation, regardless of the price point. Yeah.
Correct. Yep. We had a great question on our last one as well, where a woman, she already owned a rental property and she was currently renting herself, and she wanted to know if she could use this program to buy basically a second house for her to live in herself.
Yep.
And the answer was yes, you can do that. So that is an option as well.
Yeah.
Traditionally, that's not why most people would use this program. Most of them are you know, either first-time home buyers or they're re-entering the home market after a period of time of renting.
Mm-hmm.
Yeah, they are pretty flexible based on the scenario, right?
Cool.
Any other questions that people have? Feel free to put them up there. See, another Q&A just popped up.
How can you find your credit score? Good question. So the most accurate thing to do would be go to a bank, your bank, or speak with a mortgage broker and have them do what's called a soft touch. All right. So they're going to poke around with your credit file and they're going to be able to tell you what your credit score is. Most people are afraid to have people poke around with their credit score because it negatively affects it. Every single time you try to pull it up or you try to find out what your credit score is, it does negatively affect it. But that soft touch where they do just a quick scope, that'd be the most accurate way to get your credit score. You can very easily go to, I know Credit Karma is in Canada, maybe. So Dale's got Equifax in front of us here. Talk to us.
Another option. It's another option. You can do it yourself online.
Yeah.
Usually you're allowed to pull it for free twice a year, I believe it is.
Okay.
But that may also do more of a hard hit on your credit as opposed to what Cam mentioned, where a mortgage agent can kind of view it without really pulling your full credit history, right? So it depends on what you want to do.
I think if you're in the research phase, yeah, you don't need to pull your full credit history, which is going to have a negative effect on your credit score. But you know, it is good to know where you're sitting right now, and speaking with somebody at your financial institution that's going to be able to give you some advice on, you know, hey, you're doing a great job, or hey, this is what you could do to put yourself in a position to meet your goals, right? So that's that answer. If you quickly Google Canada credit check online, like Dale said, you can find it online. You need your SIN number to verify your identity, but that is an option, not as accurate. Does it cost anything to get your credit score? Depends. I think on Dale's phone there, it said $5 to do Equifax.
Yep. Yeah, that's for a one-time trial,
yep.
right? Again, if you talk to a mortgage agent, a mortgage broker, or a bank,
yeah.
they typically will run it for free for you and tell you what it is, because they have a membership basically where they can pull unlimited amounts of data and credit checks, right? So
they want to help you. So if you come to a trusted professional, and we can refer you to somebody that is amazing at their job and would be able to help you, absolutely. They want to help you because they want to earn your business, right? So if you come to them and say, this is what we're thinking about doing, this is our goal. At this point in time, we need to know what our credit score is so that we can plan and put ourselves in that best situation. Can you please help us? The answer is always yes if you're talking to a true professional, because they want to help you, okay? Any other questions before we log off? Is it common to dip into your RRSPs for a down payment, and what is the payback period? Great question. If you are a first-time home buyer, you could take advantage of the first-time home buyers plan. And yes, you could use a portion of your RRSPs. I believe it is up to $35,000 currently to pay for a down payment on your first home. Like I said, first-time home buyer. If you were to do that, it's tax-free. Okay, so you get 15 years to pay that money back tax-free. And as long as you are repaying that money within that time period, no tax, no interest. Okay, so that is a way to access funds right off the bat if you're a first-time home buyer to get into home ownership. So good question, and yes, it is common, happens all the time. Great question. Anything else?
Actually, my dad used that program after he had been renting for probably 15 or 20 years. So I believe the rules are if you had owned a home and then you haven't owned one for at least 4 years,
you can
then you could
the first-time home buyer
re-qualify for that.
Yeah.
Yeah.
Pretty cool stuff. Okay, if that's everything, then we want to say thank you to everybody for coming out tonight. We really appreciate it. Hope that you found some value. You will hear from us a little bit later tonight to book that follow-up call and continue helping you along the way to home ownership. Like I said, whether or not it's a traditional purchase or through the assisted buyer program. Thank you and have a good night.
Thanks, everybody.